Welcome to the deep dive. Today we're looking at, well, a fascinating balancing act by one of India's really long-standing banks. City Union Bank, or CUB. We've got their Q2 and half-year results for FY26 right here.
Exactly. And, our mission today isn't just about reading the numbers off the page. We're trying to figure out how this bank, nearly 121 years old, based out of Kumbakonam, a place known for its stability, right? How are they pulling off double-digit growth and doing this pretty significant cleanup of their balance sheet? We're looking at asset quality, their business mix, and importantly, their big push into digital.
Yeah, and the background here is quite important, I think. This isn't just any bank. They just celebrated 120 years of what they call Swadeshi banking excellence. And the event had, the president of India, the union finance minister attending. It really underscores their history, their sort of deep roots.
It does. It speaks to a legacy of, let's say, prudence, which makes the growth numbers we're seeing even more interesting, doesn't it?
Absolutely. So let's jump right into that. The core financials for the first half, H1 FY26. What did that performance actually look like? Was it like just a small bump or something more sustained?
Well, I'd almost call it accelerated consistency, if that makes sense. They're hitting double digits pretty much across the board on profits compared to last year. Net profit after tax, PAT, that grew 15%.
15%. Okay.
Yeah, from about 550 crore to 635 crore. And operating profit before provisions, that was also up 15%, hitting 922 crore.
15% growth on a base that old, that's impressive. That kind of profit needs a strong engine behind it. What about the balance sheet itself? How did that grow?
Well, look at deposits first. Total deposits shot up by 21% year over year. We're talking almost 70,000 crore rupees now.
Wow, 70,000.
Yeah. And crucially, they're deploying it. Total advances, their loan book, that grew by 18% to over 57,500 crore. And here's the kicker. CB's hit double-digit credit growth for, 6 quarters straight now?
6 quarters.
6 quarters? So it's not a one-off thing.
Yeah.
It shows real market traction, consistent demand for what they offer.
Okay, and on the other side, the deposits. What about the quality? We always talk about Chase current and savings accounts being the cheap and sticky money for banks.
Absolutely key. And their CASA ratio was pretty solid at 27% of total deposits. Now, maybe some bigger banks have higher ratios, but the important part here is that CU's own CASA book grew by 16% year over year.
16% growth in CASA itself.
Exactly. That's really valuable. Low-cost funding coming in fast gives them a huge advantage, a cushion for profitability.
Okay, right. Let's shift gears to what might be honestly the most critical story in this report. Asset quality. For a bank that's been around this long, managing risk is everything. And this is where things get really interesting. The turnaround in bad loans.
Yeah, turnaround is almost an understatement. It's not just trimming the edges. It feels like a fundamental shift. Let's talk NPAs, non-performing assets. Bad loans, basically. Gross NPA. They slashed that by 112 basis points. Remember, a basis point is just 0.01%. So down from 3.54% to 2.42%.
That's a big drop. But the real headline, as you mentioned earlier, has to be the net NPA figure, right?
That is the headline. Net NPA dropped by 72 basis points. It went from 1.62% all the way down to 0.90%. 0.90.
Wow.
Think about net NPA. That's the bad debt left after they put money aside, provisions to cover losses. Getting to 0.90%. Well, it signals their safety net is really strong, and the core loan book is looking incredibly clean. And it's the first time, certainly in their recent reported history, that net NPA is below that key 1% mark.
Below 1%. That points to a massive operational change, doesn't it? How do they actually do it so quickly? Was it just throwing provisions at the problem, or is the recovery engine genuinely firing?
And that's the crucial distinction, I think. This isn't just accounting. If you look at the actual flow, the movement of NPAs in rupee terms. The bank reported something quite amazing. They had negative net addition to NPA for the quarter.
Hold on. Negative net addition. What does that mean for listeners?
It means the money they clawed back from old bad loans, plus the loans they upgraded back to performing status. That total was more than the amount of new loans that went bad during the quarter.
So recoveries actually beat the new slippages.
Exactly. They recovered more than they lost in that period. For Q2 FY26, that net addition figure was negative 941 million rupees.
Okay, that's not just treading water. That's actively reversing past issues faster than new ones pop up. It suggests a really effective recovery system, not just a temporary fix on the books.
Precisely. And because those recoveries were so strong, they didn't need to provision as heavily. The bank even notes this, saying recoveries reduced their provision needs. So they only put aside about 110 crore for bad debts in the whole half year. That flows straight to the bottom line eventually. And you see their provision coverage ratio, the PCR, up at 82%, including technical write-offs, more safety buffer.
Right. So connecting the dots for someone watching this, less bad debt means more capital freed up, right?
Yeah.
More resources to put towards that 18% credit growth we saw, and it makes that growth feel more sustainable because the bank is fundamentally less risky. Okay, let's pivot then. Efficiency, profitability. How good are they at turning this cleaner balance sheet into actual returns? What about core metrics like, say, return on assets?
Yeah, it shows discipline. Return on assets, ROA, basically how well they use what they have to make profit, hit 1.59% for Q2.
No.
And what they pointed out is that this level is above their long-term target of 1.50%, and it's been there since early 2025.
So consistent performance above their own benchmark.
Exactly. Sustained efficiency at a higher level. That's key.
And net interest margin, NIM, that tells us about the profitability of just the core lending and borrowing.
NIM for Q2 was 3.63%. And crucially, it ticked up from 3.54% in the previous quarter, Q1.
An increase, okay.
Yeah.
Why?
They mentioned two things. Faster repricing of their deposits, so they adjust their funding costs quickly, and, this is interesting, migrating their gold loans over to fixed interest rates.
Ah, that is interesting. The gold loan book is obviously huge for them. Moving those to fixed rates sounds like a play to lock in predictable profit margins, kind of insulating them from future interest rate swings.
Seems like it.
But let me push back on that concentration a bit. Gold loans are 28% of advances, MSME, and trading another 42%. That's, what, 70% combined? It feels very focused, maybe even concentrated. Is there a risk there?
It's a fair question. But CUB seems to manage that concentration risk through, well, security and granularity. Their core focus is MSME, retail wholesale trade, agriculture. These tend to be smaller ticket loans, often self-secured.
Yeah.
And the gold loan book, while large, is incredibly low risk. Think about the loan to value, the LTV. On average, it's only around 61%. That leaves a massive 39% buffer against gold price drops.
That's a big cushion.
And the proof is, well, the NPA rate on that entire gold loan portfolio is tiny, like 0.04%. It's practically negligible. So it acts as a stabilizer, really, a low-risk, high-growth engine for them.
And the efficiency numbers seem to back up that stability story, too. Cost-to-income ratio, CIR, was around 49%.
49.16% for Q2 suggests tight cost control even while they're growing, and they expect to stay in that 48% to 50% band for the full year.
Makes sense.
And one last thing on stability, capital. Their capital adequacy ratio, CRAR, under Basel III is super strong, 21.68%, with Tier 1 at 20.71%. That's way, way above what regulators require. Gives them enormous room to grow without needing to raise fresh capital anytime soon.
Okay, so strong foundations. But let's look forward now. It's easy for a bank this old to just, rest on its history. But CUB seems to be actively trying to stay relevant, even leap ahead digitally. What's surprising you on the innovation front from this traditionally prudent bank?
Yeah, this is maybe the most exciting bit, actually. It shows they really get that their core customers, MSMEs, need modern tools. They're doing some really clever things with UPI, the Unified Payments Interface. And these aren't just generic features. They seem targeted at specific business needs.
Okay, like what? Give us some highlights from their UPI toolbox.
All right, so first, stuff tailored for businesses. They launched UPI Multi-Signatory. Think about an SME or a joint account. Making a payment often needs approval from more than one person, right?
Sure, for compliance or control.
Exactly. This feature lets them make UPI merchant payments that digitally require sign-off from multiple partners or signatories. That's a huge time saver and compliance feature for their main business clients.
Ah, okay. That directly links the digital tool back to their core market, the MSME sector. Makes perfect sense. What else?
They're also thinking about access and maybe the future of payments. They launched UPI Circle, or My Devices. This lets you make transactions from trusted devices you own, like maybe a smartwatch or even your set-top box eventually.
Interesting. Looking ahead.
Yeah. And for security and ease of use, they're adding biometric like fingerprint and Aadhaar-based face authentication for UPI. So instead of typing a PIN, you could use your face or fingerprint. Faster, potentially more secure.
And what about credit access through these new channels?
That's where UPI Depend comes in. This sounds really neat. It's a fully digital credit line, but it's secured, specifically backed by a fixed deposit you hold with them, and delivered instantly via UPI.
So leveraging an existing safe asset, the FD, to provide quick, flexible cash through UPI. That's a smart combo of old-school security and new tech convenience.
Exactly. Prudence meets utility.
Were there any completely new products launched beyond just UPI features aimed at getting new customers or keeping existing ones?
Yes, definitely. They introduce CUB Desire. This is basically a systematic savings plan trying to attract regular savings, and they're offering it to non-CUB customers too, which is interesting.
Trying to widen the net.
Seems like it. But the real standout product, I think, is the MSME corporate card. They're billing it as India's first AI-enabled credit card, built specifically for small and medium businesses to manage expenses and reimbursements.
AI-enabled, that suggests it's doing more than just offering a credit limit. It's maybe helping with the accounting headaches, the expense tracking that small businesses hate.
That seems to be the goal. If it simplifies that complex workflow, it's not just a card, it's a tool that embeds the bank deeper into the MSME's daily operations. That builds serious loyalty.
Okay, so let's quickly wrap up what we found in this deep dive on City Union Bank. We've seen strong 15% profit growth across the board, a really dramatic and seemingly structural cleanup in bad loans, getting net NPA below that magic 1% mark.
Right.
And a continued profitable focus on their core areas, MSME and gold loans, which seem quite secure, actually. And all of this is supported by, good efficiency and just massive capital buffers.
Yeah, the final takeaway for me is that CUB is succeeding by maybe not trying to be everything to everyone. They're sticking to specialized lending where they have, frankly, generations of expertise. And they're pairing that traditional prudence and high capital with some really smart targeted digital tools, especially those UPI features built for businesses. It feels like a strategy to stay relevant and profitable, even with all the competition out there.
And that brings us to our final thought for you, the listener, to chew on. We've seen CUB use its specialized lending focus, MSME, gold, to keep risk low. At the same time, they're rolling out things like UPI multi-signatory and that AI-powered MSME card to really lock in their customers. So here's the question. In today's Indian finance world, with aggressive fintechs and huge universal banks, could this strategy's specialized focus combined with rapid, targeted digital upgrades actually be a more sustainable path for legacy regional banks than just trying to copy the big guys and diversify into everything? Something to think about until our next deep dive.